China has strongly criticised America's handling of the economy after the US had its credit rating downgraded for the first time. The decision by the Standard & Poor's agency also prompted China to suggest there should be a new global reserve currency to replace the dollar. But other major economies are playing down the downgrade. This report from our business correspondent, Joe Lynham.
Americans are waking up today to a new feeling, no longer being the safest economic kid on the global block.
Haven't gotten any good news lately. You know, everything's costing more. Jobs are hard to get.
I don't think we're a bad investment. I think we've got some very, very bad leadership and bad interest groups that are affecting things very negatively.
Standard & Poor's are one of the three main credit rating agencies who provide their opinion on the creditworthiness of countries and companies. It's just an opinion, and as we saw 3 years ago, it's often very wrong. But that opinion still matters to governments and markets. That'll almost certainly trickle down and result in ordinary consumers paying more to take out car or home loans. And America's biggest trading partners aren't hiding their anger either. India called for urgent action from Washington to cut its ballooning debt mountain, while China, America's largest single creditor, was even more forthright. The Xinhua official government agency said China had the right to demand the United States address its structural debt problems, and it called for a new, stable global reserve currency to avert a catastrophe caused by any single country.
With the rating downgrade, is really a lose-lose situation. The US suffers and Asia suffers too.
The real concern about today's announcement is the impact on global economic confidence. It was brittle thanks to squabbling American and Eurozone politicians anyway. It might snap entirely after this downgrade. Joe Lynham, BBC News.
And Professor Chris Roebuck from London's Cass Business School gave me his assessment of China's reaction to the US credit downgrade.
There are probably two elements to that. I suspect there is obviously an economic element in that with the amount of debt that they have in America, they have a financial interest. But I think also there's a political dimension as well in that it gives them an opportunity to question the viability of the dollar and maybe suggest that another currency should take its place. And, you know, we don't get more than one guess about which one they might be suggesting.
There's also a political element to the decision by Standard & Poor's, isn't there? They are very explicitly saying they don't have confidence in the political agreement that's been reached over the debt in the United States.
Yes, and there is that question mark there, although we will see what the other rating agencies say in due course. And certainly everybody is now rushing around saying that, you know, the rating agency is right, or it should be right because of the reputation of the rating agencies. But first off, the American Treasury have said that there is a $2 trillion error in the calculations. And secondly, let's not forget that it was these institutions that were hauled in front of the Senate committee not 2-3 years ago because of their involvement in creating the financial crisis. Because these very institutions were being paid by the global banks to effectively repackage what was bad debt and then allow them to sell it on as good debt, which meant that in the market, virtually no one had any real understanding in terms of the risk they were taking.